In this video, we'll go through the top 5 ETF targeting Japan, the world's third largest economy, and offering you the opportunity to diversify your portfolio. These ETFs are proposed by top-tier institutions and they are easy to buy and hold for the long term. I personally invest in those kind of ETF for my portfolio. Japan is offering a lot of upside due to change in regulation, the weak yen, and change in the economic situation, and it's as good as a time as ever to get some exposure to this economy. If you are investing with ETF and want to diversify internationally, this video is for you. Here's the 60-second reminder about ETFs. They have grown so much and they are now massive. They offer the opportunity to invest for all investors, big or small alike, in a simple and cost-effective way. You can actually park them into a tax-favorable account like an IRA, Roth IRA, HSA, ISA or NISA, or a taxable account. If you are already investing with a 3 to 5 fund portfolio, you have part of it that is diversified outside of your home market or the international part. Today we are looking at this international part, and rather than having only one fund, we are looking at the possibility of having 2 funds internationally, one that goes overall and one focused on Japan, the world's third largest economy, offering a lot of upside. There are many ETFs targeting Japan, but here's a selection of the top 5 ETFs based on performance and expense ratio. My name is Yoram from Economia. Welcome back to the channel. Let's get started. The first one is the WisdomTree Japan Hedged Equity Fund. It tracks the fund by the same name. Basically, export-focused companies that are dividend-weighted, and on top, it's hedged against currency fluctuation between the USD and the Japanese yen. It's been along for quite a long time and it's a large fund. Its expense ratio is reasonable at 0.48%. And it has had good performance in 2022 despite the crazy economy and crazy stock market we had and the fall in the Japanese yen. Its holdings are household names that you're gonna recognize immediately. Given the currency shift we've seen recently and the fact that this fund is export focused, it should have a lot of upside in the coming year. Continuing, we have the X-Tracker MSCI Japan Hedged Equity ETF. It basically tracks the index of the same name with a currency hedge to avoid any exposure to currency valuation. It's much smaller than the previous one, but still offers good performance and a comparable expense ratio. Its holdings are not as export focused as the previous one, but you're going to recognize a couple of household names here as well. Again, a good choice in terms of performance and expense ratio. Our third contender is the iShares Currency Hedged MSCI Japan ETF. As the name indicates, it follows the MSCI Japan index. But this one is 100% currency hedged, so you don't have any problem between USD and Japanese yen. We have a fund that's a bit smaller than the previous ones with similar performances and similar expense ratio. Now, it's looking at large and mid caps, but it's more into domestic, so hello from the future, a small correction here. Of course, the only holdings that this ETF has is iShares MSCI Japan ETF with a little percentage of cash. So just this correction here to making sure I'm making no mistake, and it's still a very, very good contender in our top 5. Let's continue. As we are going to the second half of the video, it would mean a lot to us if you could give this video a like and subscribe, or just leave a comment to tell us that you've made it this far. It would help the video be exposed to much more people and again help us a lot. Thank you very much. Let's continue to number 4. Number 4 is the WisdomTree Japan Hedged Small Cap Equity Fund. This one is a bit different because the index it follows is a dividend-weighted Japanese small cap, something that the average retail investor has no exposure to. So this is quite interesting. It's a smaller fund. The expense ratio is a bit on the expensive side, and if you look at these holdings, you probably don't know many of them. However, as it's targeting small caps, it offers the potential of upside for those up and coming Japanese companies. So it's worth having a look and considering if you want to take a bit of a risk to try and get more upside. Number 5 is the FRANKLIN FTSE Japan Edge ETF. This is the newest in the lot, launched in 2017, and it's also the smallest one. No small caps here, it's only mid cap and large caps. You would recognize most of the holdings. Very good performance in the last few years and cheap expense ratio. Also a good choice here, although we don't have as much time to look at the performance in the past. And there is a bonus. This is the ProShares Ultra Short Yen. We are in a completely different territory here. Basically, this is pure currency ETF. And what it does is it is betting on the yen getting weaker. And as the yen gets weaker, you get double the return compared to how weak it gets. It is highly speculative. It's not for the long term, and that's why I didn't want to put it in our top 5, because this is not our target. Our target is buy and hold for the long term. But I wanted to give you an exposure of the other type of ETFs that are existing in the world, concentrating on Japan. And this one had a fantastic year because the Japanese yen went so low and so down that shorting the Japanese yen was a home run for the get-go. It's not going to continue. This is not something to hold for the long run. And even the prospectus says that you should not hold it more than a day or 2 days in a row. So it's not something I recommend, but that's just to give you a little bit of flavor of what's out there. The Japanese market offers an interesting option for international diversification with the same risk as other markets. Its export-focused large corporation could help support and benefit a long-term buy and hold portfolio. If you would like me to do another top 5 on other market, please leave a comment below. And if you're interested in portfolio strategy, I have a video for you right here. Thank you again for watching. If you like this video or learned something, please give it a like and do not hesitate to subscribe. Thank you, and until next time, goodbye.